Good morning, good afternoon, good evening, and good night, depending where you are joining us in the world. And welcome to Decrypting Crypto and Breakout Solutions. My name is Wasim, and today I'm going to be speaking to you guys about why Bitcoin is an apex asset to invest in. Now, a lot of people do not even understand what money is and what assets are for them to be able to understand where they should invest their money. So first of all, I'm going to break down the characteristics of Bitcoin versus gold and then also versus fiat. So if you don't know what fiat is the money that we use. It's basically money by decree because the money that is out there today is only backed by the government's word and debt around the world. So let's go into this. So first of all, let's look at what, let's define what gold is. So gold is one of the oldest and most accepted forms of money, as well as a store of value. Anywhere you go around the world, people will generally be happy to accept gold as payment, but gold is not perfect. Okay, and the reason for that, and the reason why gold is not perfect is because there's a few things that gold cannot do. First of all, let's look at the pros for gold. Gold is fungible, which means that 1 gram of gold is always going to be worth another gram of gold. So 1 gram of gold is equal to 1 gram of gold. Gold is durable. Gold has lasted over 5,000 years in the history of mankind, and it's been used over and over again in history for people to store wealth and for people to do purchases around the world. Gold is scarce, meaning that gold is hard to find. And it's even getting harder and harder to find. And now, even with technology, they need to find more and more gold. And because of technology, they have been able to find more and more gold. If you've been following us, or you've been watching the internet, or if you've been keeping up with social media, you may have heard that last year they found a mountain in Africa that's all gold. So although it is scarce and it's hard to get to, they are finding more and more gold. So the cap of gold can also increase over time. And it usually increases around 2% per year. Gold has a long-standing track record. So we know that gold has withstood the test of time. It's always held its value. For example, one of the great things about gold is back in the Roman times, you could buy a tunic, a belt, and slippers for around an ounce of gold. Today, you can also buy a suit, a belt, and shoes for around the same price of an ounce of gold. So an ounce of gold today is around $1,700 to $2,000 US. If you want to get a well-tailored suit, that would cost you around $1,500 to $2,000. So over time, gold has kept its value. Now, what are the cons of gold? Where does gold fall short in today's society, in today's economy, in today's global world? Number one, gold is not very easily divisible. What that means is you can't take your little bar of gold or an ounce of gold and go down to your local cafe and be able to pay for your gold with your pay for your coffee with your gold. So you can't shave off a piece of gold off your bar of gold and go, here, this is the payment for my coffee. Gold is not portable. One of the biggest hurdles for gold is it's very, very hard to transport. You need a lot of security. You need a lot of it takes a lot of space. So you need a lot of storage space to store it. It weighs a lot, so it's got a lot of challenges when it comes to transportation. If I'm trying to make a deal with someone in another state or another country or even another suburb, it might be too hard for me to get to. It makes it very hard for me to send that gold to them because they'll have to go through a whole bunch of stuff. And then again, try taking gold outside of your country to another country. We've seen over and over when countries go into war or the civil unrest or civil wars or whatever, and people are fleeing, they try to take the gold with them, but they usually get stopped at borders and have that gold confiscated from them, or they have to use that gold to be able to get through. So gold is hard to transport and very hard to take across borders. And lastly, gold is harder to verify. Now, it can be easily, we've heard of fake gold or faux gold, unless you have a specific knowledge about gold or you know how to verify gold. And when they're making large transactions in gold, they have to go in and get third-party verification. Now, let's look at fiat, the money that we're using today. So fiat is also one of the biggest scams, in my opinion, that we have been led down in this world, because the one thing about fiat currency is it has no cap. Governments can print money whenever they want. And we've seen this recently. Now, I don't know when you're watching this video, but recently, right now, we've got a major banking collapse happening around the world. So right now, we've seen, even though the Fed has had quantitative tightening measures in place, all of a sudden, after the collapse of Silvergate, Silicon Valley Bank, Signature Bank, and other banks are starting to collapse now. What we're seeing is now the Fed has opened up the floodgates, they've warmed up the money printer, and they're printing trillions and trillions of dollars. So in this case, we know that fiat cannot actually hold its value. The history of fiat has shown that it loses value over time. Now, what are some of the pros of fiat? So one of the biggest pros of fiat is that it is divisible. You can have a coin, you can have a note, different denominations, and be able to pay for things. So, you can have a 50-cent dollar coin, etc., and pay for different things. However, as money becomes devalued, those smaller denominations of money become worth less and less and less. Fiat is portable, so it's easy to send, especially in today's electronic world. Banks will allow you to send money anywhere across the world. Now, sometimes it can take up to 5 days, and they take a huge amount of fees. If you're trying to send money, say from Australia or where I am, to, let's say, in the UK, if I want to send that through the banking system, the fees are absolutely huge. That's why you've got things like PayPal, Cash App, etc., but there's still the fees are quite high. So what are the cons of fiat? Number one, it's not durable. As I said before, we've seen in history over and over again that fiat loses its purchasing power over time because governments cannot help themselves but use the money printer to print their way out of trouble. Number two, fiat is not fungible, which means an Australian dollar is not always equal to a US dollar or a Canadian dollar. There's a price difference. Number three, it's not always verifiable. Now, we know that historically there's always been fake money or counterfeit money, and it's a big problem. This also increases total inflation. Now, governments spend millions and billions of dollars for new technologies, etc. It's still that money can be counterfeited. Fourthly, is fiat is not scarce, which means that the governments can print money endlessly, and we've seen that since 2020, governments have printed over $7 trillion, and now they're looking about printing another $2 trillion. So they get up to almost $9 trillion in just 3 years. And when you have something that you flood the market with, what's going to happen? The value of it is down. Track record, we've seen over and over and over again, every fiat currency collapses around 100 years after its creation. So fiat does not have a good track record. Now, let's examine Bitcoin for a second and why I believe Bitcoin is the apex asset to be able to have your investments in. Number one, Bitcoin is durable. Now, what that means is that since 2009, Bitcoin's purchasing power has increased fold over fold. Over 24 million %, it has gone up. Okay. Bitcoin is divisible. So one Bitcoin has 100 million Satoshis in it. So it's divisible down to 11 decimal points. Now, what that means is when Bitcoin is worth $1 million per Bitcoin, one Satoshi would be equal to 1 cent. So 100 Satoshis would be equal to $1. Because a lot of people say to me, well, how do I price things in Bitcoin? This is how you start pricing things in Bitcoin. Bitcoin is portable. Bitcoin is the only asset that you can send instantaneously all around the world and pay very, very small fees. Experiments have been made where they sent $1 million from one part of the world, from the UK all the way to New York, and they only spent like $1 or $1.50 in fees for $1 million. This is absolutely unimaginable in the fiat system, or even with gold. Bitcoin is easily verifiable. On the Bitcoin blockchain, the blockchain verifies the Bitcoin, so you can't counterfeit Bitcoin. You can't send a fake Bitcoin from one person to another. Now, some people might turn around and say, well, you've got Bitcoin on other chains, you grab Bitcoin, etc. And that is not real Bitcoin. That is a Bitcoin that has counterparty risk, which is something that is outside of the scope of this video. But understand that real Bitcoin on the Bitcoin blockchain cannot be counterfeited. Bitcoin is scarce, meaning that there's only ever going to be 21 million Bitcoins out there, which means right now we've got about 19.8 or 19.5 billion Bitcoins in circulation. So, and it gets mined over and over again. And because of the Bitcoin halving, the Bitcoin scarcity becomes higher and higher over time, or lower and lower over time, depending on how you want to look at it. And I'll get into that in a few moments. So as you can see, Bitcoin has a lot of pros. Now, what's the cons of Bitcoin? There's one major con of Bitcoin compared to gold and fiat currency, and that is that Bitcoin still, admittedly, does not have a track record. It's only 14 years old. It's a very volatile asset. People still don't know whether it's going to make it or not because they don't understand it. But I'm going to show you guys that as people start to understand Bitcoin, the value of Bitcoin, and more people are going to put their wealth into Bitcoin because they see it as a superior asset class compared to everybody else. So that's the only con that Bitcoin really has when you're comparing it to gold and fiat. It doesn't have a track record because it's only been around for about 14 years. And if you have a child, and I put this up on my Facebook yesterday, if you're a parent, you know what 14-year-old kids behave like. The Bitcoin is only 14 years old and is going to behave like a 14-year-old child. Now, one of the things is that most people think that Bitcoin is only a currency, and we just compared Bitcoin to currencies. However, Bitcoin is more than that. Bitcoin is also a store of value. So when you start considering Bitcoin as a store of value and as an asset class on its own and an investment class on its own, now you've opened up a much broader assets to compare with. So we're not talking about just gold now, we're talking about real estate, we're talking about stocks, we're talking about art, we're talking about business, we're talking about so many other things when you can start looking at that. And everything that you buy is an asset, whether you're buying a chocolate bar, whether you're buying a car, whatever it is that you're buying is an asset. Some assets are depreciating in value, some assets are appreciating in value. So a car, for example, is a depreciating asset generally because over time it loses value. Unless you're buying a rare car or a collectible, things like that, they might be appreciating. But overall, as a general category, cars are depreciating value, are depreciating assets. So that means now that Bitcoin is competing against gold and other assets for its value. So now we can look at what does that look like. So one of the biggest things to really understand is when we're competing against all different assets, we have consumption assets like food, energy, things like that you're not going to get back. You've got depreciating assets, things like vehicles, buildings, equipment. These are all depreciating assets. You might say, hang on, buildings are appreciating assets, but I'm going to argue with that because a building itself is not an appreciating asset. The land is appreciating. The building on the land might appreciate over time. However, it's depreciating because over time, you're going to have to replace the building. Over time, you're going to have to put maintenance in that building. Over time, you have to maintain the building. You've got inflationary assets such as currencies and airline miles. For example, we know that fiat currencies are inflationary. You've got scarce assets like land, like gold, like arts and collectibles. And then you've got appreciating assets like equities. These are assets that return real value or growth over time, and they are scarce. So equities and things like that are appreciating assets. And then you've got Bitcoin. Bitcoin is a scarce asset. Bitcoin is an increasingly scarce asset, and Bitcoin is an early stage growth, an early stage project per se. So the potential, the upside potential is still huge. Now, when we look at all these assets put together, then we're going to look at and understand that there's about $90 trillion worth of assets globally. And that's what Bitcoin is competing with. So one of the things that we really should be understanding is that the lower the interest rates are, the better the company's valuation, when we're talking about equities, which means that interest rates may mean discounting the value of future cash flows, right? So as global real estate value also continues expected to give you future cash flows. So many people, when they invest in real estate, is because they're expecting a cash flow from it. And that's fair. I'm not here to say people don't invest in real estate, because real estate does give you a cash flow and can appreciate over time in general, but you've got to also weigh how much effort, how much time, and how much money and how much maintenance you need to put into real estate. So what makes Bitcoin different is all of these assets have an inflationary side of it. So money, equities, they can have an inflationary side of it. However, when we're talking about Bitcoin is a kind of deflationary asset, because every 4 years, the Bitcoin mining is halved, which means that the annual supply growth becomes less. So if you remember, I spoke to you guys in the earlier video, I said that gold has a 2% asset growth, or has a 2% growth per year. Now, Bitcoin's growth, or supply, I should say, gold has a 2% supply growth per year, and Bitcoin's supply is diminishing over time. Back in 2016, it was around 3.6% per year in terms of supply growth. In 2024, when we have the next halving, it will become, after the last halving in 2020, it's 1.8% increase in supply per year. Once we go to the next halving, which is around a year from now, it will become 0.9% supply increase in supply. And then 2028 will become 0.45%. So every 4 years when you have a halving, the supply of Bitcoin becomes less and less, which makes it more scarce, which then increases the price. And as more and more people see that, this is going to become more attractive for people. So the core design of Bitcoin is that it does have a finite supply. That's the one thing that Bitcoin has compared to most other assets. It is finite. You can't make more than 21 million. And this itself makes it very, very attractive. So the other thing is, one of the things that Satoshi Nakamoto said, he said, as the number of users grows, the value per coin increases. It has a potential for positive feedback loop. As users increase, the value goes up, which could attract more users to take advantage of the increasing value. So it becomes like a self-fulfilling prophecy. So it becomes like as more and more people get in, the value goes up. As the value goes up, more and more people want to get in. As more people get in, the value goes up. So it becomes like a loop that keeps getting the price up. So when you think about it that way, then you want to start thinking about, well, what is the potential for Bitcoin's value? So if we were to consider that Bitcoin is only right now around $400 billion in market cap, which is around 0.4% of the $900 trillion of assets around the globe. And that means, 0.5% of the $900 trillion value of assets around the globe. Will you see how small of a market cap it has and the potential that it has? Now, if we were to consider that gold has a $12 trillion market cap, art has an $18 trillion market cap, equities have a $115 trillion market cap, real estate has a $330 trillion market cap, bonds have about a $300 trillion market cap, and money has around $120 trillion market cap. And we start thinking, well, how much of these market caps can Bitcoin actually consume? Now, I will show you a chart here from Jesse Myers that he's put up, and you can play around with this. You can make your own chart and see whatever you want with it. But if we were to consider that Bitcoin was going to take, say, 50% of gold, 5% of cars and other collectibles, 5% of fine art, 15% of stock market, 15% of real estate, 30% of bond, and 30% of money, Bitcoin has a potential of getting to around a $200 trillion market cap. Now, if Bitcoin gets to a $200 trillion market cap, that would mean that one Bitcoin would be worth about $10 million. Now, I know it sounds far-fetched right now, but so did a $23,000, $24,000, $28,000 or $69,000 Bitcoin 13 years ago when Bitcoin was worth 1 cent. If somebody said to you 13 years ago, buy these Bitcoins for $5, you can get 5,000 Bitcoin, and this Bitcoin is going to become, each one of these is going to become worth $20,000 in 15 years or 13 years, or whatever it is, people have said, get the hell out of here. It's hard for the mind to conceive, right? So once we get rid of that bias and say, well, hang on, Bitcoin's already done 24 million % increase, does it have the potential to do that? And that comes down to your conviction and really thinking, will the world move more and more towards Bitcoin? Now, if you're looking at what's happening in the world right now, especially with the banking collapse, it makes sense that more and more people are going to go to a safe haven like Bitcoin. Now, I'm not saying that a rich person or billionaire or an oligarchy is going to go sell all their wealth and put it into Bitcoin. We're not saying that, but they might sell a portion of their portfolio and put it into Bitcoin. Bitcoin is easy for people to get into. You don't need to go pay exorbitant fees for real estate and lawyers' fees and all conveyances, etc. You don't need to do that. Anybody can open up an exchange account and start dollar costing averaging with $25, $30, $10 if you're in America per week, per month, or whatever. And this is savings that you can use over time. So now that you understand the value that Bitcoin has compared to other assets and how easy it is to get into Bitcoin, now you're starting to see why Bitcoiners keep saying Bitcoin has the potential to get to $1 million. Bitcoin has the potential to get to $10 million. Bitcoin has the potential to get to all these crazy prices because they understand the value of Bitcoin and the value proposition that Bitcoin has. I hope this video has been educational. I hope you've learned a couple of things from there. If you are interested in finding out more, please make sure you like, subscribe, and turn on that notification bell for us as we publish more and more content to help you understand the power of cryptocurrencies and the power of digital assets and how you can potentially create a financial future for yourself that's much brighter than what it is right now. My name is Wasim. Thank you very much, guys. Have a great day and see you next time.